Hello and welcome to today's live webinar where we look at the ASX investment opportunities in review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Up on screen is the year-to-date performance of our ASX 50 model portfolio. So part of today's presentation is we'll have a look at the current holdings in the model, but just to revisit the performance of that. In the first 2 to 3 months of the year, the performance was relatively flat, which versus a global equity market, which at one stage was down around 10%. The defensiveness of the portfolio held up well in a pretty soft market in the first quarter, and through being overweight predominantly in commodity names, Insurance Australia Group, ASX, and we'll have a look at the names that are in the portfolio, but the model's done very well and outperformed the market over the last 3 months. So year to date, delivering returns around 12.25%. So if you're not already set up as a subscriber to our new technology, we're offering an introductory special, if you like, where normally the professional level subscription's $3,900 for the year, and we're doing that for $1,320 for a full 12 months access to that professional level. So if you want to take advantage of it and you're not already set up as a free trial or as a subscriber, just visit investorsignals.com, click on the free trial button up on the top of the page, or you can just email or call us at the office and we'll help you to get up and running with the technology that we're looking at today. Okay, moving into a graph of the XJO. Now, I think probably what is most relevant here, that is, we've almost gone 6 weeks now with the index staying within a very tight range. So if you think about it, that sort of where the mouse cursor is there was, say, 6,250 on the XJO, and we've really spent 6 weeks trading either 50 points above that or 50 points below that. So if you've had trouble identifying a large number of opportunities in the market, that's not surprising. Through these weekly webinars, I think we've picked up sort of a handful of ideas. Semuc's probably been the standout high conviction performer so far, but we're also only in the beginning phases of earnings season getting underway. Wednesday last week we had a Rio report. Today and tomorrow are fairly quiet, but certainly by Wednesday, Thursday, Friday this week we've got a lot heavier earnings calendar. And just to bring that into screen to give you an idea of the type of companies that we're having a look at here. So tomorrow we've got Transurban reporting their full year results. On Wednesday we've got AMP, CBA, Tabcorp. Thursday, AGL, Crown and Suncorp. Friday, James Hardie, News, and REA, which is the real estate online portal. So this week, probably the key ones that we're looking out for this week would be Tabcorp on Wednesday, thinking that's a better result than the market expects. CBA, on balance, it probably just meets or slightly disappoints. I'd expect CBA. Crown will be an interesting one. I think there's a chance that may do better than the market expects as a result of cost control. And James Hardie will be an interesting one as well, given that that's a stock that we've looked at in recent recordings. If we move in and just sort of pick through sort of the ones that are likely, I think Computershare will disappoint. IAG will probably meet expectations. Downer EDI, so that's one that I'll chat about today where we want to be long that stock going into that result. Origin will be an interesting result. We're looking for the company to provide commentary around the reinstatement of dividends. Evolution, that'll be one that I'll touch on today. Ansell, I think maybe that stock's getting a bit expensive, and that's something we'll look at today. Woolworths, that'll be, the market has fairly high expectations with Woolworths trading about 24 times earnings. So that's going to have to be a good result to justify the current pricing. Healthscope, so we'll look at that stock today. Newcrest. So some of these mining companies that have already just had their production numbers, we're probably not looking for too many surprises on the earnings side in these names. And then Star Entertainment down here on the 24th, looking for that to be better than the market expects. Okay, so up on screen, XJO consolidating, moving sideways, but as we get into this month's earnings calendar, maybe we start to see a little more volatility creep into the market. So what we do now, click on watch list, we'll go down, select the recent signals. This stores the last 7 days of algorithm buy and sell signals. We click on the first code in the list and let's start moving through these, and maybe you can just make some notes as to which stocks are making their way onto the high conviction list. Now A2 Milk, I've highlighted in prior weeks that we've got a price gap back down here to around 880. If we were to see the stock trade back down, fill that price gap, bounce off 880, I suspect that that provides a good entry level into A2. Ardent Leisure, not doing here at the moment, although it's under an algorithm buy signal. Not doing here in ALU. So some of these I'll skip through and we'll focus on the names. So Amcor's under algorithm sell conditions. The stock's rebounded from $13 up to $15.50. I suspect it's just getting to a point where it runs into resistance. We're not looking for too much in the way of a correction lower, but over the second half of this year, I think Amcor provides a good buying opportunity as we see a little bit of profit taking off this current rally and a new higher low that's likely to form in the back half of this year. And that should set up a good long-term holding opportunity for Amcor. APN News and Media, so not doing there, but we've had the algorithm buy signal. ARB Corporation, so good higher high, higher low structure here. We've had a pullback to around this $20.50 level. Good amount of volume accumulation. You could watch this short-term momentum indicator. It's not one of the core stocks that we're active in, but from a technical standpoint, the positive momentum there looks encouraging. ARF, we just have resistance there around 225, 230. Bank of Queensland. So now we get into a list of stocks that we are more active in. Across all the banking names at the moment, we've got algorithm sell signals, and CBA's earnings result on Wednesday, I think, will obviously set the scene for how the market's perceiving these upcoming results. But we suspect that the bounce that we've had in these banking share prices has largely just been a result of them being oversold, and we're now probably running into resistance for the most part across these banking names. EML under algo sell conditions there. Now, Evolution Mining, this is one that our strategy's been to think about this in two levels of purchases. One where we're buying on this support line here off the back of the algorithm signals, and leaving a little more opportunity to pick up shares if we see it at a further discount down to around 260. And that's just a reference to sort of where the stock broke out of support last time around that 250 level. But we may not see the stock, pull back to that, but certainly across a number of these gold mining stocks at the moment, we're seeing buy signals. So Evolution is one that we're pretty comfortable with at around that sort of 270 level as an approximate entry point. Not doing here. Harvey Norman under algorithm sell conditions. So this stock was in the model portfolio and it was then removed, which we're comfortable with that, given that the overarching pattern here is for lower lows and lower highs, and we're just starting to see some slight softness come through in some of the retail data relating to housing type goods that make up a big part of Harvey Norman's business. But so looking at resistance there around 365 in Harvey Norman. IDP not doing it there at present. InvoCare just flagging that the stock's now running into resistance up here at around $14.50. The stock probably has okay dividend support with about 3.5% yield. And it is a stock that in the back half of this year, if we see a retracement and then an algorithm buy signal, we would certainly have a look at this as a longer term holding opportunity in the market, but we're just not there at the moment on the algorithm signals. James Hardie, so we've had this one triggered as a buy signal, and it's a holding within the top 50 and the top 100 model portfolio. James Hardie reported its earnings result this Friday. The company's delivering high double-digit earnings growth, so something around that 15 to 20% earnings growth, and we're looking for James Hardie to push up in around this $24.50 price target, and we probably look to take profit or sell call options at that level in James Hardie. Global miners, so just an ETF there. So the difference here is that you've got, whereas a stock will have .ASX, whereas an ETF is .AXW on the end of the code there. So as you're toggling through the lists, if you see the codes that have .AXW, you know you're looking at an ETF, albeit obviously should be described in the label there as well. But BetaShares Global Gold Miners ETF, and that's under a buy signal, which we're seeing that pop up across a number of either the gold individual stocks or the gold ETFs. So generally as a theme, we've got sell signals across the banking area and we've got buy signals in gold. So that'll be interesting to see how that plays out over the next 2 to 4 months. Net wealth, so this was a recent ASX listing that did very well. You might have seen in the news recently where Bankers Trust have come out with competitive products and pricing to compete with the likes of Net Wealth and Hub, and the market had a fairly cautious reaction to that news, and we're seeing the stock come back. It probably runs into support here at around this $7 level and moves higher. So there's one that you could keep on your watch list here, Net Wealth at around $7. QBE Insurance, so unfortunately this stock's had a long history of lower lows and lower highs. The most recent structure here, the low had taken out the prior low. We're just rallied back. We're sitting below the prior high there. QBE would need to deliver an earnings result on the 16th of this month that really does better than the market expects. For the moment, our assumption is that maybe the result's more likely to be in line with expectations, and the stock really trades sideways, but not doing it there on the buy side on that one at the moment. And REA Group. So this trades on a very high PE. So again, we're not drawn to this name as a high conviction idea, but the stock does sit in the model portfolio from lower levels there at around $71, and it's continuing to make higher highs and higher lows. And we're now just getting a reminder that again, we've had a retracement within this overall uptrend, volume starting to build. The momentum indicators, you could keep an eye on these to turn positive, and we may see a little bit of a rally higher in REA Group, but it does trade on a very high PE basis, or PE multiple, I should say. Rio, so this is one of the high conviction ideas that we have, as is BHP and South 32. Our preference for these names is to overlay a covered call. We don't think there's a huge amount of capital growth, but the share buybacks that the companies are conducting provide some downside support for stock prices, and I think owning them, selling covered calls and stripping out the upcoming dividends makes sense. So when we look at Rio, it went from sell conditions in 2015 and early 2016 into buy conditions early 17 at around $60. We're now pushing up to 77, and we've got a sort of recent accumulation of signals through this sort of $70 to $80 range there in Rio. Regis Resources, not doing there at the moment. So a number of these mid-cap, smaller to mid-cap mining stocks are coming up also as buy signals at the moment. So obviously our preference is BHP, Rio, South 32 in the gold space is Newcrest, Evolution. But I think it's worth just sort of pausing to have a think about the group of companies that are coming up at present, sort of with buy signals within this sort of smaller to mid-cap area of the market. So St Barbara, Sandfire. So if I have a look at Sandfire here, you can see that it broke out of resistance at around this $7 point. So if we were to see the share price consolidate between this $7.60 and $7 level, we got the algorithm buy signals, we got big pickup in volume. The momentum indicators you could keep an eye on there, but it very well may be that we start to see a buying opportunity develop at around that $7 range here in Sandfire. Not doing there at the moment in structural monitoring or in Senex Energy, and there we are back to A2 Milk. So there's a couple of names there to keep an eye on. I've got a list going which I'll review at the end of today's presentation. What I wanted to do now is just jump into the model portfolio and have a look at the stocks that are in particular, the focus today will be the top 100 model. So interesting, out of the ASX 20, we're down to only 7 stocks out of 20 that are displaying strong buying momentum that we recommend that sit in that top 20 portfolio. Performance-wise, the portfolio is doing quite well. South 32 is down 3%, but the rest of the names in the model have been very strong performers. So if we just move through and have a quick look at the others, so in the top 50 model, if we have a look from a performance standpoint, AMP and Fortescue by a wide margin are still our worst performing stocks in the models, and we're looking for those to have a recovery bounce, and then we'll probably see an algorithm sell signal, at which time they'll be removed from the model. The other stocks that are doing very well still Aristocrat, Treasury, CSL, Origin, and so forth. So the focus for today is I want to jump into the top 100 model, and the technology that we're looking at, if you think about it in the context that it is designed for you to be able to select a list of stocks to work with, and whether that be a watch list, whether it be a group from the model portfolio, whether it be a list that you've created. But the idea is that you can nominate what list you want to work with and then click on a code that belongs to that list, and then just start toggling through the chart. So what we're doing now is looking at the stocks that are currently within the top 100 portfolio. So Aristocrat Leisure was added to the model some time back, and we can see here a long history of structural higher highs and higher lows, but there's nothing there presently on the buy side. Now AMP, we don't mind this. We think the probability of the companies being separated, which their funds management business was likely to be separated from their advice side business, when that does happen, it should help to unlock value for shareholders, and we'd expect to see AMP move higher off the back of that corporate action. But it probably won't be something that we see until the early part of the new year, once the banking inquiry, the Royal Commission, is really out of the way. ASX, so this is an alternative to holding the banking stocks. ASX delivers around about 6 to 8% earnings growth, trades on a 3.5% dividend yield. It was added to the model portfolio in 2016 at around $50, continues to make higher highs and higher lows. BHP, so again added to the model portfolio in early 17, and even the more recent signals came in here at around this $28 level. We have a further higher low formation at around 32. Our expectations is BHP really is close to full value at the moment. Obviously it's attractive with the return of capital that's going to come back to shareholders, and with that will be an opportunity for probably selling shares at a discount to the market and having the difference made up in a large dividend distribution, which will be fully franked, and that'll help the company to return those franking credits that they're sitting on back to shareholders. But for the most part, we still feel BHP is fairly full value. And if you're holding it, you can think about selling covered calls to enhance the return. Okay, moving on to the next stock in the model, BlueScope Steel. So we had recent algo buy signals here at around $14, and the stock's continuing to make higher highs and higher lows. You can see there I've shuffled up the support line there at 1672. Car sales. Probably out of these technology stocks, this is one of the ones that I'm not so excited about. If we look at the history of the algo signals that was added to the model here at $10, it's trading about 40% higher now at $14. But we haven't had a recent signal. It was over a year ago that we had the last buy signal, and we'll just keep an eye on that for when the next buy signal occurs. Charter Hall, so we had algorithm buy signals here at around the 550 level, pushing up to $7 now. Semuc Group, so this was one of the stocks that have reported their earnings. This was a high conviction buy idea that we had ahead of the result. The stock jumped 20%. If we think about Semuc over the next probably 3 years, the company should deliver above average earnings growth, 10 to 12%, which will mean that the stock will probably consolidate where it is at the moment, given that it's compressed down to a fairly low dividend yield, about 3.3%. So it'll probably consolidate for maybe 6 months, and then we'd expect to see the stock move higher again. A computer share. My sense here is that computer shares expensive, and I think that it may disappoint the upcoming earnings result. So if you're looking for something on the short side of the market, you can have a think about computer share and their earnings result coming up on the 16th of this month. From a technical standpoint, the stock was under a buy signal here at 1680. We added a small amount of this stock to client portfolios, but we've been very aggressive with the covered call option, where we've stripped the dividend and the call option income out and not looking for capital growth because of our concerns there around the valuations on computer share. CSL, so again, good history here of strong performing algo signals, but with the stock trading up at around 35 times multiple and a low 1.5% dividend yield, it's just looking expensive, and we'd like the opportunity to buy back into it on the next algo buy signal. CSR. So CSR has been one of the stocks that we've covered in prior weeks, with the stock finding support down here at around between the $4 range and say $4.40. We'd expect to see the stock rally a little bit higher, supported by an okay dividend yield at the moment of around 4.5%, and we're under algo buy signals there. So CSR is one that you can have a think about. Crown Resorts. So this is one that I like coming into the earnings result. And just as a reminder, they report their results on Thursday, and we're looking for something better on the cost control side there to underpin the earnings. Dulux, worth just having a look at this. I think in some ways we're still a little bit cautious on some of these stocks that are tied into the housing sector, but from a pure technical standpoint, you can see support here at 740. The stock looks to be wanting to move higher off that, and it'd be stop losses below that 740 level. Downer EDI reports their results on the 16th of August, and Downer operates in a similar space to Semuc Group, so our expectations is that Downer delivers results that come in ahead of market expectations. And the same as Semuc, on a 3-year outlook, we think Downer can grow earnings at around 10% per annum, which should help to drive the stock price to break out from this sort of, say, 650 to 750 range into more 750 to 850 trading range. Evolution, I covered that one, but we think finds support here at around 275. You may want to leave a little bit of cash on the sideline to continue to accumulate if you see it push back down into that 265 range, but should provide good long-term buying opportunity here. Fortescue on support here at $4.30. And I suspect that this is one where the upcoming earnings result might help to appease the market a little, and maybe Fortescue can push higher. Healthscope, bit of a long-term growth story here for HealthScope. There are no call options that you can do over the stock. Trades on just under a 4% dividend yield. But I think this ends up being a good long-term entry level into HealthScope. So we've been accumulating the stock at this 218 level. Insurance Australia Group, well supported on a fully franked dividend yield, should deliver a good earnings result, but you want to be selling call options to complement the returns there. Not doing there in Iluka. So some of these I'll just move through. So again, what we're looking at is all the stocks that sit inside the top 100 model portfolio at the moment. JB Hi-Fi, probably prefer that over Harvey Norman. James Hardie, we looked at that. That's performing well, looks to be pushing up towards our 24.50 target, and we're keen to take profit at that point. Not doing there in Magellan. Medibank Private, probably a bit surprised with actually how strong Medibank is, given that the last two earnings results have shown limited revenue growth. So at around this 320, I think Medibank probably runs into resistance, but certainly the algorithm buy signals here at around 280 have proved to be a good entry point into the stock. Newcrest, so this is one that it's worth just pausing to have a think about. It's traded sideways now for 2 years. We got buy signals popping up across most of the either individual gold names or the gold ETF. So I'm thinking that this could be the beginning of Newcrest breaking to the upside of this 2-year consolidation band that it's been in. Northern Star, not there at present. Aurora, not doing there. So Origin Energy, we like this one. This has been on sort of the high conviction list, looking for the stock to push up between 10 to 10.50, and then we think it's full value. If we have a look at this, it switched from sell conditions into buy conditions in early 17 and starting to make higher highs and higher lows. Support there at around 9.24. You wouldn't want to see it move back below that, but for the moment, pushing higher and supported by strong revenue growth that's coming from their LNG assets at Curtis Island in Queensland. Oil Search, probably looking a bit expensive. So the Oil Search and Santos were added to the model portfolio in February this year. The stocks are up somewhere between 20 to 30%, and the pattern here is still bullish, but hard to sort of buy in at this point in time. We'll have a look at that again on the next algo buy signal. Oz Minerals, I think, make a note of this. Higher highs, higher lows. We had recent algo buy signal here at around $8.75 to $9. And I still think these commodity names hold up reasonably well. So looking for Oz Minerals to move higher. Qantas, so buy conditions at around this 526 level, pushing up to 675. REA Group, I touched on that one earlier, but again, if we just revisit where support is probably around this $81 level, and therefore I've just put in this trend line. If you want to overlay the lines on your graph that I have, just go up here and make sure that this button here, Show Leon's Charts, is green, and then you'll see the relevant support and resistance lines. And sometimes you'll see these lines placed right up underneath price. Sometimes you'll see them sitting a little further away, and that's just my expectation as to where I think the buying support is going to come in for the stock. So turning that on will give you those reference points on your charts as well. Rio Tinto, having a look at Rio, so buy signals here at around this $77 level. I think eventually Rio may not push back up in a hurry and make a new high, but I think Rio can push back above $80, supported by the increased share buyback. South 32 supported around $350. Star Entertainment, so we've spent a fair bit of time on this one, but we like this coming into the earnings result. And as a reminder, that earnings result's on the 24th of August. Spark Infrastructure was one that I've covered in prior recordings, so looking for that to move up to around 230, 240, but not really a high conviction opportunity where it is at the moment. Santos mainly moving sideways, but if we look at the history here, it's gone from sell conditions into buy conditions. It was originally triggered at 473 and then confirmed again at sort of 550, but the stock's up about 30% since it was added to the model portfolio. Sydney Airport. So this was a recent algorithm buy signal. I don't mind this being added into portfolios, but do sort of feel that adding a covered call option makes sense here because we're not looking for too much in the way of capital growth. Sydney trades on about a 5% dividend yield, delivers about 8% underlying earnings growth. So selling, say, a 7.25 or even a 7.50 call option and stripping out the December dividend plus the added income from the call option, you're generating around 10 to 12% annualized cash flow. Tabcorp. As a reminder here, Tabcorp reports its earnings result on Wednesday this week and looking for that to do better. This will be the first result that we see Tab merged with Tats Group. Treasury Wines, so a little like Aristocrat. A terrific history here of strong performing algorithm buy signals. The stock still hasn't really had a lower low, lower high pattern. But it does trade on a very high PE, 30 times earnings, double-digit earnings growth. But maybe it's due for a period of consolidation, so we're not seeing a sort of strong entry opportunity there right at the moment. Wesfarmers we think is getting expensive, and you might be best taking profit and having a look at that post the separation of the spin-off of the Coles business. But again, if we look at the history of the signals, it was under sell conditions, switched to buy conditions. Support's been this $40 level for the last 4 years. And we're just starting to see that push higher. There's really been a re-rating in Wesfarmers where it was trading on a 5.5% dividend yield. It's now trading on a 4.5% yield. And that's partly because of this upcoming spin-off of Coles, but also partly because we've started to see Coles actually, after Woolworths winning market share away from Coles, you're starting to see some early retail numbers come through, or food and liquor sales numbers come through that show that Coles are starting to win back a little bit of market share. And on the back of that, that's helped the market to re-rate the stock and compress it back down to a 4.5% yield. Whitehaven, not doing there at the moment. And then back to Aristocrat Leisure. So let me just drag into screen some of my notes as to the market at the moment. So I've set these up just to say that these are stocks that I'm watching. So ResMed trades on a very high PE, but watching for the next algo buy signal. Woolworths, I've posted a note, a number of articles on the blog about watching this sell-off that we're having in Woolworths. If we could pick it up below $29 prior to the upcoming result, I think that would be a really good buying opportunity. CYB, too expensive at the moment, but next algo buy signal, we want to take a look at that, and same with Sonic Healthcare. So these are all companies that I like, but just a little bit expensive, and we want to see them retrace. At the moment, with these trade tariff issues, China is down around 20%. The IZZ's an ETF that gives you exposure to large cap Chinese stocks, and I'd probably urge you just to take a look at that. I think there's buying opportunities there at the moment. A2 Milk we looked at. Dow, that's Downer EDI. I think that's a high conviction idea ahead of the upcoming earnings result. Evolution, high conviction idea. APA Group, so let me just bring up a graph of that. This is one where subject to a takeover at $11 and at around $10.25 to $10.50, if we see the stock trade at that level, we look to close that out and take profit. Let's bring this back in. AZJ, really just a note there that is the stock getting oversold. That's really just a comment or a reminder there for me to continue to keep an eye on that. CSR, we looked at that. It is oversold, but we do have some concerns around the softening housing data. Crown, so that's a high conviction idea coming into the upcoming earnings result. HealthScope, so it's a long-term buy and hold. so that's more of a dividend play. IAG, buy right, good way to add 10 to 12% cash flow to your portfolio over that holding. JB Hi-Fi, so we looked at the chart of JB Hi-Fi, and then I think we also looked at Harvey Norman. So the difference between the two, I'll just refresh your memory there. So Harvey Norman, lower lows, lower highs, recent algorithm sell signal. And then if we go to JB Hi-Fi, algorithm buy signal support at $22. So I wouldn't want to see JB trade below 22, but maybe with the upcoming earnings result, the stock can push a little bit higher and that 22 support level holds. Link, that was a high conviction idea. It rallied from 7 up to 780, and we're going to wait for that to pull back. Medibank was a high conviction idea. That's really hit our target. Semuc was a high conviction idea. That's hit our target. Newcrest, after a 2-year consolidation, it looks to be breaking out. Origin Energy, that's been doing well as a high conviction idea. Rio BHP and S32 buy rights. Sydney buy right. SGR high conviction coming into the earnings result. Tabcorp high conviction. URW, which is Unibail, which is the company that's taken over Westfield. Bit hard due to tax complications doing something through traditional sort of ASX market, but if you're running CFD platforms, you can maybe have a think about being long URW over the next 6 months. On the short side, a couple of ideas that I'm just cautious on. Ansell coming into their result, Computershare, and just mindful that the banks all have these sell signals, and we'll be watching CBA's result closely on Wednesday. Thank you for listening in, and look forward to chatting again next week.